Hi, good morning. My name is Nasarum Min Allah. I am Finance and Operation Manager, and these are my colleagues, Mr. Gulzar Ahmed, he is HR Manager, and Mr. Waseem Sajjad, he is Marketing Manager. I'm going to start our company, which is Diamond Footwear. These are the executive summary from, you can see the scoring measures: earning per shares, return on equity, stock price, credit rating, and image rating. These are from 2010 till 2030. In this, you can see from year 10, our earning per share is 2.5. We can increase it, like in year 13, it's $5.69. It's a gradual improvement, but in year 13, it's almost double from the shareholder point of view. Return on equity is 17.3%. In year 11-12, it improved to 22%, but in year 13, it was 28%. And next one is the stock price, which is also very important one, which is like in the starting year 2010, it is $13, and we are improving like in year 2011 and 2012, but in year 2013 it is $120.47, which is 4 times or 400% increase. So after that, credit rating, we start by B plus in year 2010, and year 2013 we are at A plus. So it's quite improvement from credit rating. In image rating, we start from 70, and now in year 2013 we are at like 68. These are our strategies and policies. Maintain competitive price and product differentiation. Focus on cost minimization. Increase efficiency in production and distribution from plants to wholesale. That's very important to us. Utilization of production capacity for manufacturing private labels shoes. Now I'm going to discuss like a little chunk of income statement, like revenue and expense from year 10 to year 13. We start our revenue with $239 million, and it increases, you can see, from year 11, 12, and now in year 13 it is $335.63 million. Expenses, yes, definitely. When our revenue is going to increase, the expense is also going to increase, quite understandable. But it increases from 214 million, and now it is 282 million. Net profit, as you can see, is the chunk and the very important thing. It is $25 million in year 10. It increases as other thing increases, but in year 13 now, our net profit is $53.4 million, which we are almost increased the double. Net profit in percentage, in year 10 it was 10.5%, then 9.4%, in year 11, year 12 is 12%, and now year 13 is 15.9%. Sale revenues also increased by 18.9 million. Expenses increases by 3.69 million. Net profit increased by 15.22 million, which is like 40.3% increase in year 12. Now, earning per shares and dividends. As shareholder point of view, these are important things. And in year 10, our earning per share is 2.5 and our dividend was $1. Year 11, moreover the same, a little bit change. In year 12, we achieved like 3.93 earning per share and 1.2 dollar dividend. Now in year 13, earning per share is $5.69 and dividend is 1.25. The dividend was increased by 1.25 per share, and the cash balance is 8.4 million after paying our dividends. That's important. After paying our dividends, we have 8.4 million. Yeah, productions. We have 2 plants in different localities. One in North America and other one is Asian Pacific. And productivity point of view, we are giving pay worker per year, which is starting from 4,000 in year 10, then year 11 it was like 4,039, and year 13 it was like 4,083, which is, you can see it is 83 improved from year 10 to 13. In Asian Pacific, we have 2,500 starting. Then we are increasing in year 11 to 12. By year 13, it is 2,562. Then the 62 is the overall change. Then reject rate. As a production manager, rejection rate is quite harmful, so we see into it. In North America, we want to contain our rejection rate, so it's not too much change from 5% and every year till now 5.1%, and we want to reduce it, but we are coping with it. Asian Pacific, yes, it was a little bit high at that time when we started in year 2010. It is 7%, and then it is reducing per year, and year 13 it is like 6.6%. So in Asian Pacific we achieve better than North America. Now our branded production costs. In North America, we started with 26.22 per pair, dollar per pair. Year 11, 12, a little bit change, but we continue with the year 12 and 13, which is 29.62 more over the same. In Asian Pacific, when we started, it was like $21.6, and now we stand it at like 22.16 with a $1 change almost. Plant utilization is the important key, because everyone wants, as a production manager wants to utilize the best plant utilization. So in North America, year 10, we are like 107.6% at starting, and year 1100, and now year 13, we are using our plant by 120%. Asian Pacific, it was quite low at that time when we started in year 10, 88.2%. But because the market is big, then it is increased a little high at that time, which is like 108.5%. Then it sustained in year 12 and 13, 120%. Now I want to invite Mr. Gulzar Ahmed, who is our human resource manager. Thank you.
Hi, good morning everyone. I'm a Human Resource Manager of our company Diamond Footwear. I will explain you about the human resources. Base wages increment, we are giving them increment every year 1%. In year 10 to year 13, this is the same like 1%. Incentive pay per pair. In North America, we are paying the incentive like extra money we are giving them. In year 10, we are paying like $1.25 per worker on per pair, and year 11 it's increased to 1.90, and it's in year 12 and 13 it's like the same $1.50. In Asia Pacific it's like very low, like we are giving them 0.40, and year 11 it's increased to $1, and year 12 and 13 it's decreased to 0.70. Best practices training. We are investing money on the best practices training to our workers. We are investing money on them. In North America, we are like in year 10, we are investing like $1,000 on per worker, and year 11 is increased to $1,300, and in year 12 and 13 it's the same like $1,600. In Asia Pacific, it's like cheap compared to North America. We are investing like $500 on the best practices training in year 10, and it's increased in year 11 like $1,300, and it's also increased in year 12 and 13 like $1,600. Total quality management program. We are giving our workers we are giving them for total quality management. In year 10 we were giving them 0.50, and year 11 and 12 and year 13 it's the same like $1 we are giving them for top quality program. Next, total compensation per worker. We are giving them compensation to our worker every year. In North America, we are giving them in year 10, we are giving them $20,100, and it's increased to year 11 and 12 and 13. Now in year 13, we are giving them $22,500, and in Asia Pacific it's very low, like we are not giving them more money like for compensation per worker. In Asia Pacific we are giving them $3,700, and it's increased in year 11 and in year 12 and 13. Now we are in year 13 we are paying them $4,900. At both North America and Asia Pacific plan, total compensation increased due to increase in productivity. Now I want to call my friend, my colleague, our marketing manager, Waseem Sajjad. He will explain to you about the marketing. Thank you.
Good morning everyone. My name is Waseem and I am marketing manager of Diamond Footwear Company. So I will let you know about the marketing strategies about my company. At the start, we are offering at 250 different models of shoes at the quality of 6 rate in 6 stars in year 13, and we want to keep our company at the 6 star. It means we are high in our company, and we are introducing a lot of different models, and price per pair in internet segment $63 and wholesale segment is $46 and $52 in year 13. It's mean that Our online price, our internet price is around $63, and company is gaining lot of profit because we are selling direct our products to the customers, and the wholesale segment is a bit low. It's around $46 to $52. It means we are giving profit to our wholesale dealers. In this way they can gain some profit, and they can attract with our company. Delivery time of 3 weeks to retailers. It means we will supply our product to our retailers. It's online dealers or wholesale segment dealers. In 3 weeks we will supply them our product. Retailer sport of $400 or $450, and rebate offer is $1 to $2 per pair. It means we are giving them a good profit to get our products, and they can gain some money, and this way they are able to attract with our company, and we can supply them our products, and we can gain some profit. We are able to gain some profit. Next one is marketing, advertising expense versus revenue. I will differentiate between our internet expenses, internet profit, with wholesale internet and wholesale expenses and wholesale profit. At the start of year 10, we invest money on the internet, online selling for our products was around $1.5 million. At the end of year 12, which one was around 2.88. At the year 13, we invested 2.72, as bit low as compared to year 12. So that's why at the start of our revenue, year 10 was $19.21 million. At the year 12, we gained $39.5 million. At the year 13, we invested a bit low money as compared to year 12. So our profit is also a bit low, is around $34.21 million. Wholesales. At the start of year 10, we invested $19.94 million. At the end of the year 13, we invested $26.28 at the advertising of wholesale dealer for the wholesale dealer, and we got a revenue $194.04 million at the start of year 10, and at the end of the year is $263.95 million. So we invested a lot of money as compared to online at the advertising of wholesale. So that's why our profit is a lot of as compared to online profits. Next, I will explain the targets of future years for our company. We want to increase more sale in each region by more advertisement and price adjustment accordingly. We want to increase our sales in all regions. We want to introduce different models, and we want to maintain our price. We're not agree to increase our price in all regions. Maintain credit rating at A+, and improve image rating. We are investing money on the best practice training programs. In this way, our models could be good, could be beautiful, could be attractable for our dealers. In this way, we can keep our rating at A+, and we can improve our image rating. Production of more models to keep up with the industry competitors. We have a lot of competitors in the industry, so we will introduce different models. We are introducing new models. We are not agree to run the old models for the long time. We want to change our models of shoes. Maintain expenditures on best practice training to increase work productivity, which will result in the lower rejection rate. We want to invest money for the best practice training programs. In this way, we can reduce our rejection rates, so our progress will be good. Future, maximize shareholders' value and higher dividend payout. We want to invest money on our shareholders. In this way, we are able to got something. We are able to got a good dividend payout. So that's our target for our future companies. Thank you so much for your time. If you have any questions, you can let us know.
Right.